Tax havens and offshore accounts are among the most misunderstood topics in finance. When most people hear these terms, they immediately think of wealthy criminals hiding money from the government. But the reality is far more nuanced. In this educational series, we'll explore what offshore accounts actually are, when they're legal, when they cross into illegal territory, and the common misconceptions that surround them. Understanding this topic is crucial for anyone interested in international finance, business, or simply staying informed about how the global financial system works. An offshore account is simply a bank account held in a country where the account holder does not reside. The term offshore doesn't necessarily mean the country is an island, it just means it's outside your home jurisdiction. These accounts can be opened by anyone in virtually any foreign country. They allow you to deposit funds, make payments, and conduct financial operations in foreign currencies. The most important thing to understand is that offshore accounts are completely legal when used for legitimate purposes. There's nothing inherently wrong or suspicious about having a bank account in another country. There are many perfectly legal and legitimate reasons why individuals and businesses use offshore accounts. International business is one of the most common reasons. Facilitating cross-border transactions and managing global operations becomes much easier with local accounts. Asset protection is another valid use, protecting wealth from economic instability or political uncertainty in your home country. Investment diversification allows people to access foreign markets and spread their investment risk globally rather than keeping all their eggs in one basket. Finally, expatriate banking helps people who live or work abroad manage their finances more efficiently. These are all legal, practical reasons that millions of people and businesses around the world use offshore accounts every day. Here's the critical distinction. The offshore account itself isn't illegal, it's how you use it that can cross into illegal territory. The account becomes illegal when used to hide income or assets to evade taxes. Money laundering through shell companies is another illegal use, where criminals disguise the origins of illegally obtained funds. Failing to report offshore holdings to tax authorities when required by law is also illegal and can result in severe penalties. Finally, using offshore accounts to finance criminal activities or corruption is obviously illegal. The key takeaway is that transparency and proper reporting are what separate legal offshore banking from illegal activities. If you're hiding something from the authorities, that's when you're breaking the law. Most countries have strict reporting requirements for offshore accounts. In the United States, there are two main reporting mechanisms. FBAR, which stands for Foreign Bank Account Report, requires you to report foreign accounts to the Financial Crimes Enforcement Network, or FinCEN, if the aggregate value exceeds $10,000. FATCA, the Foreign Account Tax Compliance Act, requires reporting foreign assets to the IRS if they exceed $50,000, though this threshold varies by filing status. Globally, the CRS, or Common Reporting Standard, facilitates automatic information exchange between over 100 participating jurisdictions. The penalties for noncompliance are severe, potentially reaching up to $100,000 or 50% of the account value. These systems have largely eliminated banking secrecy, making it nearly impossible to hide offshore accounts from tax authorities. Let's address some widespread myths about offshore banking. First, the myth that offshore accounts are always illegal. The reality is they're legal when properly reported and used legitimately. Second, the myth that only wealthy criminals use offshore accounts. In reality, expatriates, legitimate businesses, and everyday investors use them routinely for practical purposes. Third, the myth that banks keep offshore accounts secret. The reality is that CRS and FATCA ensure automatic information sharing between governments, making secrecy nearly impossible. These misconceptions persist in popular culture, but understanding the truth is essential for making informed decisions about international finance. Certain jurisdictions have become popular for offshore banking due to their favorable tax regimes and strong financial sectors. Switzerland is known for its strong privacy laws, political stability, and sophisticated wealth management services. The Cayman Islands offer zero corporate tax and have become a major hub for hedge funds, though they maintain financial secrecy protections. Singapore provides low tax rates, a strong banking sector, and a business-friendly environment that attracts international capital. Luxembourg, as a European Union member state, offers favorable tax treaties and is a center for investment funds. Bermuda has no income tax and is particularly popular for insurance industry operations and corporate services. The United Arab Emirates, particularly Dubai, features tax-free zones, modern banking infrastructure, and a strategic geographic location. Each of these jurisdictions has built their economy around attracting international capital through favorable tax treatment and robust financial services. Let's recap the essential points about offshore accounts and tax havens. First, offshore accounts are completely legal when properly reported and used for legitimate purposes. There's nothing inherently wrong with international banking. Second, illegality comes from tax evasion, hiding assets, or failing to comply with reporting requirements. It's the behavior, not the account itself, that determines legality. Third, modern transparency initiatives like CRS and FATCA have eliminated most banking secrecy, making it nearly impossible to hide money from tax authorities. Finally, offshore banking serves legitimate needs for international business, asset protection, and diversification. Understanding these distinctions helps you navigate international finance responsibly and legally. The world of offshore banking is complex, but with proper knowledge and compliance, it can be a valuable tool for legitimate financial planning.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.